Fed rate cuts are off the table. Silver is unstoppable. This will have a devastating impact on the economy, and it will absolutely impact the price of silver. Yes, we've had an incredible week with the price of silver, and now this news could change all that. This comes from Bloomberg. June Fed rate cut odds dip below 50% after strong ISM data. That is a headline from Bloomberg. The article starts, the amount of Fed easing priced into swap contracts for this year dropped to fewer than 65 basis points. 65. The amount of Fed easing priced into swap contracts for this year dropped to fewer than 65 basis points. ISM manufacturing for March exceeded all estimates, and Bloomberg's survey of economics shows that a bond market sell-off ensued in which 2 to 30-year Treasury yields rose at least 10 basis points on the day, among their biggest daily increases this year. The markets are saying, wait. They're saying, wait, hold on. Is it possible that we have it wrong? Maybe the economy is not as strong as we thought, and we need higher rates. Maybe, is it possible that the Fed completed its soft landing and we are at a new normal? Right? That's what they're thinking. We had a new normal rate. The ISM report shows that manufacturing PMI came in at 50.3%. 50.3. This shows us that anything over 50 means an expansion over the prior month. And likewise, anything under 50 would be a contraction, right? So the U.S. manufacturing sector only expanded a slight amount, a tiny amount, 50.3%. The part that has everybody anxious is that this happened after 16 months of contraction. 16 months. Now, the article states, demand remains at the early stages of recovery with clear signs of improving conditions. Production execution surged compared to January and February as panelist companies re-enter expansion. Suppliers continue to have capacity but are showing signs of struggling, due in large part to their material supply chains. 30% of manufacturing GDP contracted in March, down from 40% in February. More importantly, the share of sector GDP registering a composite PMI calculation at or below 45%, a good barometer of overall manufacturing weakness, was 1% in March, the same as in February, but categorically healthier than the 27% recorded in January. Among the top 6 industries by contribution to manufacturing GDP in March, none had a PMI at or below 45%. Everyone is thinking that the U.S. economy has gone through the worst part, right? That's what everyone is thinking. And now we're in an expansionary period. They're thinking this while pointing to the manufacturing sector. But Bloomberg shows us that the exciting part for manufacturing this month is actually in new orders. New orders shows 51.4%. And that is exactly what you need, right? You need numbers like that. You need new orders for manufacturing to expand. That's the good news. But the bad news is that customer inventory has dropped from 45.8 to 44. And that shows us that inventory on the shelves might be the wrong inventories. Also, we see that backlog orders are contracting. This is frightening because if you use up your backlogs and you do not have new orders to support your present workforce, then you continue to cut workers. That's what history shows us. Presently, we're seeing that retail inventory is expanding, but at a very slow pace. And this means we need to dig in and determine if the Fed really engineered the impossible. Did we really have this soft landing already? And is this the new normal? Well, Bloomberg tells us the ISM report feeds into the narrative coming out last week, right? Whereby the economy's resilience enables the Fed to be patient. That means rates stay higher for longer. Remember, the Fed did the fastest rate cycle in our history without destroying the economy. This was the fastest ever. And what this article doesn't state is they did it on the most grand scale, right? This is a normal. This size of this scale of this cycle has not been done before. The article says Friday's developments included personal income and spending data for February showing that consumption remains strong while progress toward lower inflation has stalled. Subsequently, Powell reiterated that the Fed wants to be more confident in the inflation trend before cutting rates, and that strong labor market conditions means there's no urgency. This data, though, this data we're looking at shows us that the labor market may be starting to unwind. This is cynical. This is me being cynical, of course, but the manufacturing sector is not expanding at the rate that we would hope, right? That's a very small expansion that we're seeing, and that could easily lead to a cut in labor. Look, we've seen a massive struggle regarding credit card use. Massive. People are turning to credit cards more and more. That means that they don't have the money to spend. Instead, they're racking up debt. That's what they're doing. Now, this thought of rate hikes comes at a painful time as we see the climb in silver that we've been waiting for years. This silver, I mean, it's been a stagnant 2 years, easily a solid 2 years. And we're now finally seeing silver climb. And I know the history of silver. I know that history repeats itself. I know that we're on an upswing. I'm still allowing myself to be excited. I say that because I know correction is coming. Absolutely. Silver and gold are skyrocketing. They will correct themselves. I'm sorry to bring that bad news to you, but that's the reality. They will correct themselves. And as we see the Fed doing this, looking at these numbers and having us, the public, focus on what numbers they want to, right? The Fed is very excited to look at manufacturing with that little tiny percentage and try to show that the economy is expanding. It really is. It's a game of inches. I mean, it's so small. And that tells me that a correction is coming. It tells me that in other markets too, there's a correction coming in the housing market. We can't hover at a 7% mortgage rate. For how long can we expect people to take that on? Nobody's going to take on a 7% mortgage rate. Everybody's waiting for it to drop. And same thing, silver will correct itself. I hate to hold this in front of you. I hate to show this silver to you and tell you that it may be $27 an ounce now. I'm holding out. I bought silver this week. I did. I bought silver this week. I probably shouldn't have, but I'm going to stop. I'm going to hold. I'm going to wait because I know it's going to correct. And then I'm just going to, I didn't buy a lot. I didn't go crazy. I didn't buy a lot, but it's exciting. It's not a fear of missing out for me. When the price goes up, I don't feel like I'm missing out. I just get excited. I feel like I've been waiting so long to feel like this is worthwhile, right? I know it's worthwhile because I've been in this for years. I've been in it for so very long. I'm just being honest and saying that even though I say often on my videos, don't buy during the upswing, I did. I'm just like everybody else. I got excited. I bought. I'm not going either. I'm going to hold because I know correction is coming. I know that silver is going to drop soon. Okay, let's continue with the article. What Bloomberg shows is what this article really shows is that if we see manufacturing fall, then people going on unemployment, they will stay on unemployment and they'll have less money, and that will lead to a decline in spending, which means new orders go down, and as new orders fall, general manufacturing activity falls, and that's the brutal cycle that we're looking at. So what the market is showing here is that we're dealing with a game that is just so close. No, we're not completely in the clear. We cannot say with confidence that manufacturing is expanding. I couldn't say that, not with these tight margins. And that's why the idea of another cycle of hikes could be on its way, really. That's the reality. When numbers are this close, it is entirely possible that we could see another cycle of hikes. Could this knock silver off its pedestal? Could it knock gold off of its pedestal? With these incredible jumps in price that we've seen, I don't think it will knock silver down to the stagnation we've seen. I don't. But I absolutely see that we are headed for a correction, and we do need to accept that.